Well, first of all, about how the central bank can react. That's the most important question. I'm a bit wary of about commenting on the RBI policy, but generally about RBI and central banks, the objectives are price stability, which is low and steady inflation, growth and jobs, and financial stability. Even at the best of times, it is difficult to manage the challenge between these two objectives. So, at a time like this, when lots of things are outside their control, with a lot of uncertainty, it's difficult for central banks to decide what to do. So, as far as RBI as a policy stance is concerned, last time around in the February policy review, they cut the repo rate by 25 basis points. It was a straightforward decision because the inflation outlook was benign. The rupee had adjusted and there was concern about growth slowdowns. So 25 basis points at that time was a straightforward decision. But today it is very uncertain because there is inflation. So far is benign, but we can never take inflation in India for granted. Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And if on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we're to struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do. And more important than that, I can say it from my own experience, for central banks generally, and for the Reserve Bank of India in particular, at a time like this, apart from what they do in terms of policy action, it's also very important for the central bank to communicate clearly how they see the situation and how they're going to react to it. Because giving guidance to the markets and to the larger public and imposing confidence at a time like this is very important. I would sure that the Reserve Bank and the governor are sensitive to this challenge and this requirement. I'm sure they will respond. But I just thought I'd point out because people think only in terms of the policy metrics, but communication is also very important. Yeah, I'm going to get unpopular by saying this, but last night on TV I saw some reports that there is a lot of pressure on the government to come to the support of people who lost money in the bloodbath in the stock market. Now, I don't believe that the government has anything to do with this because volatility is an integral part of the stock market. Extreme volatility is also an integral part of the stock market. Investors, big or small, when they go into the stock market, they're going for the rewards, they're willing to take the risk. So if there's an upside, they're taking the upside. They never say that we're going to give away part of this to the government. So when there's an outside, they've got to take that. And more importantly than that, for the government to come to the rescue of stockholders, people who lost money, is going to be a big, big moral hazard because the implicit assumption behind this is that the government is sitting on an infinite amount of money and there is no cost to it. Of course, there's a cost to the government coming to the rescue of people who lost money. For example, the government gets the public sector enterprises to go into the stock market and pull it up. There is a cost to doing that. And that cost is being paid by the entire economy. For example, if I'm not investing in the stock market and be very conservative, but I'm a taxpayer, if on the other hand, the government is doing something to support a section of the population who have lost money in the bloodbath in the stock market, why should the rest of the economy pay for it under the cost to it? And that's unfair. So I don't believe that there is any responsibility of the government to support people who lost money in the stock market, except to ensure that the markets function properly and regulators are doing their job.